Good day, everyone. Well, earlier this year, there was a dramatic downward revision when the BLS revealed that job growth had been overestimated by 818,000 for the prior 12 months, and markets took it in stride. But what stands out about the latest July 2025 jobs report is that the scale of the downward revision for May and June, which was a reduction of more than 250,000 jobs, hasn't been seen since the peak pandemic months of early 2020. Now, according to Goldman Sachs, this marked the largest two-month revision since 1968 during non-recessionary periods. Economists note that negative revisions have occurred every single month in 2025, underscoring a persistent deterioration in labor market conditions. And furthermore, the quits rate sits at its lowest level in the last decade, and more than 1.8 million people report being unemployed for at least 27 weeks, which is the most since 2017 outside of COVID. Now, that makes the current episode historically significant for how rapidly job market sentiment changed in only a couple of months. Two Fed governors and Trump, who dissented against Powell at the July meeting, are starting to look prescient. All three have pointed to labor market fragility in recent months to argue for lower rates. An economist, David Rosenberg, wrote, had the Fed been aware of these massive downward revisions, the consensus among FOMC voting members would have converged on Waller and Bowman this past Wednesday. But that said, global liquidity continues to push higher. So even with the delay in lower rates, the digital printing presses roll on, which should help cushion market weakness. And the news, nevertheless, had spurred Trump to fire the Commissioner of Labor Statistics, saying the jobs numbers are being produced by a Biden appointee who faked the numbers. Now, we know that the data on various key metrics has been manipulated over the years. And Trump's claim adds another potential layer of manipulation for political purposes if this is true. But that said, Trump can bloviate, so it can be challenging to know where the truth lies. Now, Ray Dalio wrote, quote, I probably would have fired the head of the Bureau of Labor Statistics too. And that's because its process for making estimates is obviously obsolete and error prone. And there is no good plan in the works for fixing it. The huge revisions in Friday's unemployment numbers are symptomatic of this, and especially because the revisions brought the numbers toward private estimates that were in fact much better. I assure you this is something that I know a lot about because of how I use data to follow the economy and bet on where it's going, unquote. Bank of America wrote that the labor supply has cratered due to immigration restrictions. So while demand has also weakened, labor slack hasn't increased. And they pointed to stable unemployment and steady wage growth as evidence that the slowdown stems from more constrained supply than collapsing demand. More than half of the revisions were due to seasonal factors and public payrolls, according to them. And Goldman reiterated its view Monday that the U.S. economy is near stall speed, so the Fed will have to deliver 3 rate cuts in a row starting in September. Now, at the same time, Powell says that the issue is the low unemployment rate, so some think he may not cut rates until next year, but that is in sharp contrast to CME Fed Watch Futures, which shows currently an 88% chance of a cut in September when they next meet. Now, when it comes to debt ceilings, I think we know that the sky is just the beginning. Whenever the debt ceiling is reached, it is soon raised to much higher levels so that the Fed can continue to create money to pay the broad spectrum of debts. U.S. interest on debt now exceeds $1 trillion a year. But other countries, such as China, have many of its provinces paying actually all of their profits, all of their revenues to service their debts. So that's quite a bit more extreme. I think that this is also true with some of the other countries. Basically, the world is awash in debt. Governments are broke, hunting for money any way they can. And the way they have to do it these days is they just have to keep printing. Now, in relation to all the money being printed, the top 10 companies, if you look at the S&P 500, They're pouring R&D into anything related to AI. Data center construction spending will eclipse office construction spending in the coming months. And this has been especially true since the launch of ChatGPT on November 30th, 2022. So in consequence, the top 10 companies have been well outperforming the other 490 companies since early 2023, which means they have been the top performers for nearly 2.5 years since ChatGPT revolutionized AI usage. Now, assuming this river of digital money will continue to flow, for now at least, until we see otherwise, these top 10 companies well entrenched in AI should continue to outperform, which also suggests that the 3X ETFs that are concentrated in tech stocks such as TQQQ and TECL, as well as leading crypto-related instruments such as GBTC, MSTR, and ETHE, should also continue their sharp uptrends. All these instruments had deep corrections whenever printing slowed or stalled. I'm going to send a chart that it's one I made before. I've sent it before. It's the map of QE basically, and it shows that whenever QE slows, you got problems. And the Fed is always, fortunately, signals such slowdowns, such as Powell did in November of 2021, and as also he did in 2018, or in the first half of the 2010s, whenever a QE program came to an end. So yeah, it's pretty high correlation on a monthly chart that you'll see. At any rate, Gil, how are you seeing the markets?
No, I think they're kind of choppy. Today you were starting to peel off again like you did yesterday, and then news came out that Apple is investing another $100 billion in the U.S. to build manufacturing, which to me is neither here nor there, but it sparked a huge rally in Apple, which in turn affects the NDX the most, which is up 1.04%. But NASDAQ indexes are up, Dow's flattish, S&P's up 0.66. And breadth on the NYSE is basically running flattish, 1390 to 1309, and negative 1970 to 2400 on the NASDAQ. So it's something of a mixed market. I just look at where the setups are pushing me. And so if I look at what's looking good, not much that I really want to be jumping on the long side right now, but I am long miners though, and SSR Mining is one strong name. But there's Apple. I mean, do you want to buy that? You're right back up to the old highs. I think if you bought it this morning when you saw the news, possibly that was a trade. Agco getting tight here down near the 10-day line on light volume, Voodoo volume. They've got earnings. Well, they had earnings last week, so that's out of the way. There's Arista. That's a viable gap up. Your intraday low is 133.57. Now you're 139.24, so probably a hair extended. AeroVironment, Voodoo pullback into the 20-day line, so that looks like a long entry. We'll see if that works. Cisco, back up of the 10 and the 20. The volume rate's drawing up though, so no pocket pivot. Extreme Networks was a viable gap up at the open, and then it reversed, came all the way in to a low of 1883, and now it's back up to where it opened up. So that kind of illustrates some of the volatility. Alphabet is just hanging tight. Voodoo pull back into the 10-day line. Centrus Energy, this is a refiner of uranium. So you have a viable gap up, and it's barely holding. The low here is 234.04. Right now you're trading at 248, so a little extended. On the flip side, Alcoa is looking like a short here at the 10 and the 20. It started up this morning on big volume, so almost looked like a viable gap up, and then it just kind of flaked out. Airbnb was a short at the 200. Applied Materials looks like a short here underneath the 50. They've got earnings next week. AMD is shortable gap down, trading right at the 20-day line. I believe you are just below it. So in theory, a short entry using the line as a covering guide, or you could use the high of the day, so you treat it like a shortable gap down. Coinbase heading lower. All the whole stablecoin thing is kind of sifting out because it's not a huge profit opportunity, and there's a lot of uncertainties about it. So, as in terms of the monetizing it, so a lot of these companies like Circle that had a big move, and then a lot of people thought this was a high tight flag. Not really that tight. It is high, but it's failed. So, and most of them do anyways. Freeport McMoran, coppers got whacked last week when Trump announced that they were exempting copper cathodes from the tariffs. So that's basically a refined form of copper. And so those supplies would be coming in, and so it wasn't seen as an advantage to Freeport, and it got whacked along with the rest of the space, which was a little odd, but we know that everything reversed up here. This thing rallied initially when Trump announced the tariffs a few weeks ago, and so that was a clue that maybe it wasn't all that great, and then this just kind of killed it. So now you're rallying into the 200-day line, and it looks like a short. MongoDB wedging Voodoo rally into the 200-day line. NRG was a short at the 10, 20, and 50 after earnings. What else? Nutanix, a weak rally into the 10, 20, and 50. That's a short potential short entry. Supermicro was a shortable gap down, using the 50-day line as a selling guide or a covering guide today. Tenaris, short near the 50 and the 200. Unity Software, ouch. That was a nice double top. Got close to this left side peak over here at 38.96 and then reversed. Got up to 38.90. So fell 6 cents short, and then it reversed and broke the 10 and the 20, and now looks like it may be headed for the 50, but that's a nice reversal. Another company, though, that's just losing money, so there's nothing really attractive in terms of profitability, but that hasn't kept a lot of stocks from moving higher. If I look at my gold miners, the one that I'm in, I bought this morning, actually last night after they reported earnings, was SSR Mining. And there's a Bible gap up this morning, and it's pushed higher. For the most part, the sector is acting well. Newmont breaking out recently. New Gold back above the 50-day line. That's the second 5-day pocket pivot in a row if this holds. First one was at the 20-day line yesterday, and the second one now is at the 50. McEwen Mining just back above the 10 and the 20. Some of these still have to report earnings. Kinross reported, and that thing was a buy along the 10-day line earlier this week. Actually, I take that back, last Friday, and has since broken out. It's just going nuts. IM Gold also moving higher. So you can see this area of the market is fairly coherent. A lot of these stocks trying to break out, or they are breaking out. Gold is holding tight. Gold looks like it wants to go higher. There's Gold Fields, another one ripping, Fortuna. So just down the line here, Equinox Gold was a pocket pivot yesterday at the 50-day line. So there it goes. But I would say for the most part, I think there's the bid under gold, and I guess silver is coming along for the ride too. But gold is moving higher for reasons that are not technically related. So a lot of the old like gold bugs, I listen to their commentary and they sound pretty clueless, because anytime it starts to go down like it did last week, they're all bearish and saying, "Oh, we're going to go to 3,000," and then when they say that, you just go long, and it's back up, and really all it's doing is basing. I think it wants to break out again. And I don't think this tiff with India is very good, because it pushes India more towards the BRICS nations. And I think eventually you'll see a new kind of BRICS will be like a new Bretton Woods. I mean, after World War II, the U.S. got everyone to use a dollar for trade by assuring everyone they would back it with gold. And so everybody was comfortable with that. But then they stopped in 72, right? When Nixon, I think it was 72 or 71, when Nixon closed the gold window. But technically, nobody could buy gold, I think, at that point, since Roosevelt made it illegal. But in any case, we had backed the currency with gold, then we didn't. Now China is trying to get either use the new BRICS currency or use the Chinese yuan as a trade currency, and they're buying gold up to back their currency with gold. And I think a lot of other countries are doing that. And you're also seeing a lot of countries repatriating their gold. I'm trying to remember what was the latest country to do so the other day, taking it back from London or in the U.S., wherever it's stored, because they don't trust anybody. So meanwhile, gold is just hanging tight, and that looks pretty good. Um, I think the only way to interpret these markets, I think looking at the big picture and what the Fed's doing and the economy slowing and this and that is all, that's just muddling through everything. The setups will show you what is happening. So the key is to tune into the setups, tune into what the stocks are doing. Forget all this babbling that all the pundits babble on cable financial TV. Just focus on the stocks because they will push you in the right direction. If you follow the setups, and you may have to move around a little bit because I think we're in a position with the market where it's a little confused. I think the risk of a further sell-off is pretty decent, probably higher than it's been for a while, because if we look at the index, is really, you finally had the reversal off the peak last week. I think that was what, after the Fed, or wait a minute, what's today? Wednesday? So that would have been Thursday. So here's Wednesday. So the day after the Fed, I guess it went higher in reverse. And
yeah, job support.
Yeah, and then you bust a 20-day line. Now you're back up above the 10-day, okay? But all this is just like it's some turbulence, and you really don't know whether it indicates there's a big storm coming. You like that analogy? So that's the way I'm looking at things. You see that the S&P too, same thing, but you're pushing into the 10-day line, and I think volume's running lighter today. And it's a news rally. The market looked like it was going to start rolling over earlier, and then the news about Apple and semiconductors being exempt from the India tariffs got things turned around. In fact, this morning, I've been working the stocks for the last few days. The stocks was trending higher. And then once that news, I got to get back. I got to get to today here. Once the news hit, it was around in here, I think, it sold off. So we'll see whether this sets up again on the long side. But, you've got some big stocks, semiconductors, looking like they got trouble. So, so we'll see how this all plays out. Excuse me. Anyways. That's really the story for me. I mean, I'm just playing the minors. I'll work certain names in the tech space, long and short. The telecoms seem to be better. So you have ANET was one viable gap. But Palantir is another one that we talked about the other day. It worked. But it's, it hasn't moved that much today. So we'll see whether this holds up. BWXT was another one, and that was that's holding up today. So you got an intraday low here, somewhere around 173 and change. So a little extended here, but it's holding up. And today you also have ANET, Arista, and that's a nice, strong, viable gap up. But you have others like A Labs, Astera Labs is up, but stalling slightly, but that's acting pretty well. Okay, so that was actionable earlier this morning, but it's a wild ride. So, but that kind of stuff can be traded, and you just have to stay alert to any potential reversals. Otherwise, it's a little of this, a little of that as the market chops back and forth, and we'll just have to see how this current rebound from last Friday's sharp break plays out, and that's kind of where I'm at. So that's pretty much all I've got. It's a pretty simple story at this point. Any questions? None whatsoever. Okay, I guess I covered it all. You got anything else, Chris?
Yeah, I was just going to underscore that, gold, because it is looking constructive right now, getting tight in there, and it's kind of a nice beacon for all the other gold stocks. You can see it. A lot of the gold names are doing very well, breaking out and whatnot. So I think in general, precious metals, basically hard assets, and these, top performers in tech, as well as Bitcoin and Ethereum. I think, right now it's looking pretty good for them. Of course, this concern about the labor market may be a bit unfounded because of what I was saying earlier. But let's see how the data plays out. Obviously, if things start coming to a crashing halt, that's going to affect everything. But it hasn't happened yet, and it may very well not happen. And on the other hand, if we start to see a slowdown, the Fed is going to do what it does. And there's a lot of ways that money can be created, not just through interest rate direction. And the Fed knows it. So, that just kind of keeps things in a good space overall. as we've seen, since 2008, this global liquidity tends to rule the day on the long-term trends. And that's where we're at right now, with M2 having broken the new highs once again.
Yeah, so we're kind of in a confused period here, and so just play it close to the vest. I think that's a smart thing to do, and stay with what's working until it doesn't work anymore. End of story. So, anyways, thanks for showing up, everyone. We'll catch you next week. Take care and trade well.
So long, everyone.